Welcome to another RS Wave SNX price action update. Okay, so this is what I believe is happening in terms of the actual correction for this crypto. Okay, took a good look at it, and it appears as though the bulk of this move down was a Type 1 weak wave C, and what happened overnight here was the DE pattern, right? So you'd have to start measuring the fib from this level here at the red line. And then after that 5 wave move, we've had a pullback to an important support area, which is the 0.618 retracement, the 1000 period moving average, and also the previous high from that large 5 wave move that occurred back in June, I believe, right? So price appears to be bouncing now. So that's the high there, the dotted line at the top there, the white one. So that seems to be like a confluence, three different types of support that it's encountered now. So as per my previous update, I do believe that we are in the beginning of wave three. Now it appears as though we could be in a third of a third wave. So I wouldn't be surprised if this thing starts moving much faster to the upside. As you can see, we've already started to bounce from that area after it basically retested it. This is completely an Arias wave type of analysis. Well, that's the name of the channel, right? So this makes sense according to that this is the end of a correction. Obviously, you've started to see some impulsive moves there. If this continues higher, I mean, I don't expect this correction to last very long. I mean, if we're in a third of a third wave, you'd expect it to move fairly quickly, right? Because wave threes aren't really um, weak, right? They're not something that lasts too long, right? Wave threes, I mean, look at the last impulsive move right here, right? I mean, look at that thing. That thing's sharp, right? Now, this is obviously a larger version of a wave three, right? And I expect higher prices. But at the same time, you still need to have your corrections. You still need to, you know, get your pullbacks. And as obviously the market moves higher, more market participants join the move. Most of them will join toward the end, which will cause a top out process. However, I don't see this as a problem. Following the waves is to me just the important type of way of making a correct, well, as correct as you can be, making a good educated bet on which direction and how far the move will go. Now, it almost appears as though the S&P rally has fizzled out. But in saying that, I don't think that's just the opinion of the mainstream. Um, to me, you just can't be sure that markets don't just create new highs or just keep moving when a lot of the people are still bearish, right? Now, some people call them bear market rallies, but if it makes a new high, it was never a bear market rally. It was actually just part of the prior trend. It's just that we had a pullback as you do, right? This is a pullback here. Yes, you can have the fractalized version of a larger pullback, right? As I've mentioned before, right? This is this is when I mention the wave three and the wave four, right, being completed not just on this market, but I mean, you know, this happens at all degrees of trend, right? Um, Another thing is look at this inverted head and shoulders pattern. Don't you think that wants to? A few people would be using that as some kind of way to enter the market, right? This very same thing happened at the smaller degree right? When this move started, okay, and I'll bring it up because it's interesting. Right down the bottom here, we had a similar situation where we had an inverted head and shoulders pattern as well, and then it broke to the upside in a pretty sharp manner. Because there's a lot of people looking at these patterns, and these are just technical patterns. They totally make sense with what goes on is going on you know uh, in the pattern, right? It's just that different people interpret the market in different ways, right? I interpret it in my way. Someone's using Elliott, someone's using a pattern or whatever, right? To me, the one key thing is to remember as a trader, and I think it comes from Jack Schwager, his Market Wizards guy. He mentioned the one advice he'd give traders is know when to get out before you get in, that type of thing, and I think that's important. I think it needs to be, people need to remember that, and obviously risk management is important, because you don't want to lose all your capital and you can't make any more gains unless you keep pumping it in there. But yeah, everyone's got their own different strategies. But probably going on for too long now, but I just thought I'd mention those things. Let's see what happens from here. If we keep making higher highs, obviously. Um, but as I said, if we're in a third of a third wave, we should see this take off fairly soon in a fairly sharp manner, um, and finally crack through that 1,000 period moving average on the 4-hour chart instead of falling right back down like all the previous attempts. So that'd be an indication of a change of trend. And as I've mentioned before, I don't see this pattern uh, being able to do anything else apart from what it's doing, because as I've mentioned, there's only two patterns that occur in the market. It's a 3-wave move and a 5-wave move. Doesn't okay, and there's also 3 versions of those moves. So obviously, it's something that I am aware of using my knowledge. I don't want to say anything to get me banned again, but yeah, it's just very interesting how these patterns all fit together. People who say that it's impossible to know what the market's going to do next, uh, they're just talking about themselves. No one's perfect, but practice is definitely something that can help. So hopefully you found this video interesting and informative. Thank you for watching.